You have a really unique insight into what is going on with China. When we first met, you ran the copper and coal business, building up a multi-billion-dollar trade with the country. A lot of people trying to understand what's going on there now, JS, and I'm just wondering what your insight is.
Yeah, I think, well, first of all, let's say a few words about the results today. As you know, we disclosed our first half results. A very strong performance, $7.2 billion of returns declared today to our shareholders, including $2.2 billion of interim dividend, which is the highest in the entire 146-year history of the company. Now, to your question in terms of outlook, the outlook is pretty positive. In relation to China is, as far as we see it, and remember, we have multiple entry points in relation to China. We're selling iron ore, we're selling bauxite, we're selling copper, and so on and so forth. Today, it's absolutely clear that the economy is slowing down, as expected, as forecast. At the same time, you saw a few weeks ago the Chinese government deciding to put some stimulus into the system. So today, when I look at the order books I have in China, as I said, either in iron ore, bauxite, copper, and so on and so forth, I do not have any concerns whatsoever. So the Chinese situation, as far as we see it, is pretty good. My personal experience of it is, you know, I go there maybe 3-4 times a year. Last time I met with Chairman Chao, the chairman of SASAC, who controls most of the SOEs in China. It was pretty clear in his discussion that the restructuring of the steel industry, the restructuring of the aluminium is here to stay, which means that China will continue to buy high-quality product, and it's a great piece of news for Rio Tinto.
Well, JS, at the moment, though, just to talk about China a little bit further, do you see them hitting an inflection point where they do start to boost internal demand by shifting towards stimulus and pulling away from deleveraging? Is that a scenario you can see playing out?
Well, yeah, I think it could happen. It could happen, absolutely. I think they have been able to manage the debt level in a pretty good way. You know, I'm one of the most optimistic person in relation to their ability to manage their debt level, and I've been saying it on this program a few times in the past. Today, I'm not concerned about their ability to manage the debt at all. The economy is still growing. You know, 6.7% as they managed to deliver in the second quarter of this year. If you look at it by any kind of other standards, other geographies, it's a massive number. So today, China is still growing. It's not growing as fast as it used to be. There's still lots of raw material, and Rio Tinto is very well placed to benefit from it.
In many ways, though, Rio Tinto also in the eye of the storm when it comes to the trade story, JS. Many people would point to the fact that you're the second largest aluminum producer outside of China, the biggest exporter of aluminum into the United States from Canada. That puts you in a little bit of a point of tension at the moment, JS. I don't see that tension in the numbers. Do you have the confidence that it will stay that way?
Well, let's be absolutely clear. I mean, let me give you an example. It's absolutely clear we are a very strong player in aluminium. You know that the bulk of the aluminium we produce in Canada is sold in the US. We represent around 1/3 of all the aluminium, or should I say aluminum, consumed in the US. And today, there have been no issues whatsoever. There have been no material impact in relation to the trade and the tariffs and so on and so forth, because the way the pricing works, it means that the tariffs today are paid by our customer and the end user in the US. That's the first aspect. The second aspect is we need to step back. You know, the best interest from an end user in the US is to have access to a low-cost, reliable source of aluminium, and some people would say access to a green source of aluminium. And today, the aluminium smelters that we have in Canada are the best. They are not even in the first quarter of the cost curve, they are in the first decile. And if you combine this with two things, one is they are hydro-based, so it's a source out of water, and that's in terms of energy. And the second element, if you think about the partnership we signed recently with Apple and with Alcoa to develop inert anode technology for aluminum smelter, pretty soon they will be the greenest of the greenest across the industry. Very low cost, very reliable source of aluminum, very green. I believe that is in the best interest of the end user in the US to have access to this material. So today, to answer your question in relation to trade between the US and Canada for aluminium, no issues whatsoever.
So Jess, today it doesn't matter what I throw at you, you seem to be very optimistic and confident. Let's talk about the elephant in the room. When I woke up this morning and came into the office and switched on the Bloomberg terminal and saw London traded, the stock was down hard. The stock is still down by almost 4%. What is your read on what's going on with the stock this morning?
Yeah, I mean, let's be clear. I mean, first of all, is the entire mining business. So mining industry was down this morning when I look at it as well. That's one aspect. The second aspect is, you know, let's step back. I'm not driving this company on the back of the share price of a few hours of trading in London or wherever in New York. We'll see when it opens. This is a company which we have been there for 146 years. We've just delivered $7.2 billion of return to our shareholders, including the highest dividend in the entire history of the company. We have a sound business. What is very important, and back to your previous question, there is uncertainty in the marketplace. So what we need to do is to have a very resilient business case on the back of balance sheets, on the back of the quality of our portfolio, on the back of the quality of our performance, in order to make sure that we deliver on our commitment to our shareholder, which is to deliver superior return in the short, medium, and long term. And what we've delivered this morning, $7.2 billion of return. If you think about what we delivered last year on the full year, which was just below $10 billion, those are big money. Big ticket items, we're just delivering on our commitments. So let's see what the share price does in the coming weeks and months.
I've got 2 minutes left, JS, and I've got 2 questions for you. The increase in costs. Cost inflation is looking like a little bit of a problem on the margin. Didn't see it in the Anglo numbers. Why do I see it in Rio?
Well, I think what you see in Rio is 2 things. First of all, is we did acknowledge that inflation was coming back fast, and we acknowledged it as early as November or December, whereas maybe some of our competitors have not done it. But the second aspect is we've taken actions early on. That's what we call our mine-to-market productivity program. And all in all, what you see today is our ability to maintain our EBITDA margins. And you saw 43% EBITDA margin, which compares to 44% on the full year basis last year. $9.2 billion of EBITDA, $7.2 billion of return to our shareholders today.
Final question, JS, and I'm going to leave the most antagonizing question until last, because then you get to leave and I don't have to deal with it. You've just promised $7 billion to investors. You've basically said there's more to come. The stock's still down. There's no real sign of growth coming from this company. The critics would say this mining company, which should be very cyclical, has just become a utility. It's become boring. Why is that a good thing, JS?
Hold on. We have to be clear. Our commitment to shareholders is very simple. We have committed to deliver superior return in the short, medium, and long term. That's the first point. And we had to re-establish our track record. Like the rest of the industry, last 10, 15 years of the industry have not been very good. Last couple of years for us have been very good. We delivered $10 billion last year, and we delivered 7.2 for the first 6 months of this year. Now, at the same time, we are very clear that growth has to be an element of our strategy, because if you don't grow in the mining business, you disappear because of depletion. We have some attractive growth options. We were one of the very few, maybe the only one, investing at the bottom of the cycle. Think about the investment we did in the iron ore last year. Think about the investment we are currently doing in bauxite in Queensland. Think about the investment we're doing in copper and gold in Mongolia at this point in time. So we have some growth options in our portfolio. What is very important for us is to focus on growth which is of high quality. And my view is the old mantra of value over volume. It's better to deliver few projects but do them very well, on time, on budgets, in the safe manner, than trying to pursue too many things at the same time and have an average performance. Our mantra is about value over volume. Our mantra is about creating value for our shareholders. Our mantra is not about being big for the sake of it.